This is Market Day Report. We're glad you're with us. We're working our way through a Friday headed for a weekend. Now, normally we would be trading some USDA reports. Like yesterday morning, we would normally have a weekly export sales demand report. And our weekly export sales report, we didn't get that. Now, we might also be trading a World Ag Supply Demand Estimates, WASDE report. There's another acronym for you, but we didn't get that this month. Looks like we may not even get that next month. So what do we trade? Well, let's look and see what's trading right now and then figure out why we're there. The corn market is where we begin, still down 3 at 425. This is a market, though, that has been moving higher. In the last 8 sessions, it's settled higher 7 times. Beans, penny and a quarter lower, 1043.5. It's been moving higher as well, in part because soy meal contracts have been higher. 7 straight sessions. If we finish higher today, make it 8 in a row. To the wheat market, and we'll touch this quickly, penny and a half lower in Chicago, 511.5. Hard red up 3/4 of a penny and trading just under 501. Let's go to the field. Risk management commodities, Sherman Newlin. Sherman, you're in the combine. That must mean corn, right?
Yeah, we're shelling corn today. Hopefully it's our last day. We should be able to finish without a whole lot of trouble. So yeah, this could be the last comments from the cab, at least from the combine cab that we're looking at.
When you look at how your corn turned out this year, did it meet expectations?
Overall, I mean, not from what I thought earlier on, in the July, 1st of August, I thought we were really going to have some super big yields. I mean, we've had some good yields, some, definitely above average, but overall, we're going to end up with an average crop when it's all said and done. I've talked about this. You can't go 7 weeks from the 1st of August without any rain. It's going to hurt corn and soybean yields both.
Well, that's, kind of obvious in your area what you've seen, but what are you hearing from the rest of the Corn Belt? Could we actually hit those USDA estimates, or will we have a smaller crop?
I think we're going to have a smaller crop. I mean, talking to guys in different states, looking at some of these yields and averages. I mean, overall, I think we could be closer to a 180, 182, or somewhere in that range when it's all said and done. But, when are we going to find that out? Is it going to be January? Is it going to be next year? But I do think yields are going to come down. And I think that's been partly why the corn market's been supported the way it has. I mean, a while back we tried to check that 410 area, found good buying underneath there, and the market's starting to come back. But same way, soybeans, I think the yield's going to need to come down a little bit in the soybean market, and if we can get something done with China, kind of like yesterday, we've heard rumors of them buying, 1.26 million metric tons of soybeans. Whether that actually happens or not, I mean, I think it gets the funds wanting to, at least trade the market from the long side. I mean, private estimates or funds are long about 150 million or so of soybeans at the moment. So I think they're looking for some sort of action from China. And I guess we'll just have to wait and see what happens there.
All right. Well, we won't have to wait long to see what's happening in that feeder market. We've had a sell-off. Is it continuing? We'll find out in a moment. This is Market Day Report. Let's talk livestock futures, and we'll start with live cattle. And we've been lower here. Look at the losses on December. Down 637 at 234.80. Now February, April, and June, down $7.25. Well, that's a good round number, right? Why are all 3 of those down $7.25? And that's because that's the limit. We can only go up $7.25 today and can only go lower 7 1/4. And we've hit that limit, which means it can't go any lower today. That is a locked limit market right now in live cattle, and that's what we call a sell-off. And in the feeders, look, it's $9.25 lower November through the April contract. Once again, That's locked limit lower for feeders. And this is, I believe, the third time we've hit locked limit lower for feeders in 6 or 7 sessions. Sherman Newlin's with Risk Management Commodities. And Sherman, what's happening here?
I think it's the news yesterday that the leaders of Mexico are going to come to talk to President Trump next week to see about opening up the border. Now, whether that actually happens or not, we'll have to see because of the New World screwworm still going on down there. But if the market hears those kind of things, it's going to react to it because there's a lot of funds are still long this market. But the way it's been acting here lately, it's acting a little bit toppy, when you look at the charts and how things are going. I mean, fundamentally, no, nothing's really changed. If the specs want to get out, that's what's going to happen. I mean, if you take a look at some of the outside markets, gold and silver, I mentioned this last Friday, kind of acting the same way, while the rational big moves up and then big moves back down. So if you come back in here next week and, you don't get anything done with Mexico where we open up the border, I think, you could retrace some of these losses we're seeing now. Also, you're also looking at, talking about importing some beef from Argentina, albeit a very small amount in the big picture of things that really should not affect the cattle prices or feeder cattle prices all that much.
Yeah, good points there, Sherman. Sherman Newlin's with Risk Management Commodities.